Good afternoon, traders and investors. I hope everybody's doing well. It's Will Trades back with another one today here on a beautiful Monday morning. I apologize, guys, for last week. I was in New York for NFT NYC with, half a dozen friends and whatnot. Wednesday, Thursday, Friday. Wasn't able to upload, but as I was saying in my last video, we did close out most of the positions Tuesday afternoon. And on Wednesday morning, wasn't able to update you guys, but I closed my remaining one contract that I had on Tesla. And I had some Taiwan semiconductors as well that kind of expired worthless on Friday. So I didn't really take any trades while I was in New York. That was the beauty of writing everything the prior Thursday and Monday and being able to have a short little week, close everything out. And the markets really didn't do too much after the Fed minutes and the few other announcements that we had, PPI and whatnot. So the market seemed to react pretty well to those. It was pretty much a non-event. I was forecasting it to be a non-event as well because we pretty much know, guys, at this point that most of everything is priced in. As I was saying with the banking situation, why I kept doing quotations around the word crisis is because, in my opinion, it's not really a crisis. You've heard Congress now for 3 weeks straight say that the banks are well capitalized. If you guys have been following along the past year for every single bank earnings, they are well capitalized. They're not lying. The banks are very, very well positioned. Consumers are also not poorly positioned. And you also have the data from the credit card companies. Don't forget, the credit card companies have been saying for over a year now that the consumers are not over leveraged. They're not overburdened with credit. So we don't expect to see a large run on the banks right here. If anything, I wouldn't really be nervous about client deposits, especially when savings accounts, right? And, collateralized loans are paying 4.5% risk-free, right? So people tend to want to keep their money at the bank, especially people that are not in the loop of what's happening so much, right? So you can't forget, guys, that sometimes we're in a little bit of an echo chamber here on the trading floor because we know about what everything is happening by the minute, right? By the day and everything. But when you ask normal people if they know about a banking crisis or the banking situation in the US, a lot of the people will say no. They're not even following it. They'll only see it maybe if it pops up at headlines at night because the news talks about it and whatnot. But in my opinion, situation was relatively overblown. And we actually got the proof of that. We're into the first week now of the banks reporting their earnings. So pay very close attention. As you guys know, I was a big proponent of Schwab. I've been talking about Schwab for the past 2 weeks because in my opinion, their brokerage division carries the weight of that entire position, right? So a lot of the other banks, they're running, anywhere from 10 to 12 to 13% net profit margins. But because Schwab has the brokerage business and it's a large portion of their revenues, they're able to generate substantially higher profit margins. And that's why I was saying that they got bid down, unfortunately, a lot more than they technically should have. They kind of got brought down just because they're part of the banking group as a whole. But in my opinion, it was the play that should not have gone down as it should have, which is why it's my top pick in the financial industry for my portfolio personally. Not financial advice. You will lose money. And so getting into the S&P 500 here, let's do a little recap, yeah? And then I'll show you guys the plays for the week. So S&P 500, as we've been saying now for 2 weeks now, grinding the EMA 12. We have not lost the EMA 12 now. In how long, right? Since pretty much the past 3 weeks. Haven't lost the EMA 12. We're now steadily above the 200-day moving average. The move isn't extended, right? Daily RSI is fine. Since we've been getting a lot of chop this past week, none of our time frames are actually overbought. None of our time frames. And we've been getting these really funny moves to where we'll move down and then get bid back up. Move down early morning, get bid back up. Today was exactly the same thing. It lets you know that there's a lot of money on the sidelines. The dips are being bought, and the bulls do not want to go too far away from this resistance area. When I see that, guys, when I see consolidation at the highs here on the daily, you got to go up one time frame here, and you see that the bulls are kind of setting the weekly bull flag here. So we've been just higher, low, higher, low, higher, low, higher, low every single candle now for 6 weeks in a row. So it lets you know that they don't want to give up too much space, right? I was expecting, as I was saying the past couple of weeks, I was expecting to move down into this 12 EMA, but we might as well go sideways as we're doing, and the 12 EMA will keep pushing up. So we'll keep riding it on the weekly as well, right? So there was this, I remember back in the day, right, about a month ago, there was this talk of this weekly head and shoulders pattern. it hasn't really played out this way. It kind of looks like, somewhat of a tightening range for the most part, but healthy consolidation. On the monthly, right? We now have a confirmed monthly uptrend. Right? So the markets are grinding higher this year. To do a quick recap of what I expect, I don't expect, the V-shaped recovery as we got in 2020, right? The V-shape to all-time highs. We may get something like this, where it kind of slowly moves up, but I do think that the bias is up personally. All right, so just keep that in mind when you're looking for plays to add to the long terms. Some of these levels, if stocks that you like, I go for high free cash flow stocks with very good profit margins and very good growth expansion, right? And if you can find those types of stocks, right, like let's say Google, I should be doing the rundown, but I like to, when I have a thought, I like to follow it through. Like Google, right? Very, very good free cash flow, very, very good profitability. But as we can see, guys, they are still down, right? Right, sorry about that. They're still down 30% off their highs. So they're actually lagging. They're actually lagging their respective index, which would be the NASDAQ, by about 10%, give or take, right? So Google is actually lagging. A stock like Apple, right, is outperforming the NASDAQ because they're only still down 8-9%, right? So the Apple is outperforming. So I like to find those stocks that need a bit of mean reversion, meaning that they're underperforming their respective index. So keep an eye out for that. Let's get back. So SPY, really no concern for me here. We've been seeing healthy rotation by the financial sector. Like I said, financials, tech, and healthcare. Just watch for the rotation, right? If tech is red one day, what are financials doing? So today, right? Today, QQQ started off the morning red. We started off the morning red, but XLF was never red all day. It just rose from the minute it started this morning. After the first bank earnings, we just started flying, right? XLV kind of had a muted day, so they didn't really do too much. They were red on the day, recovered a bit intraday, but QQQ was red this morning. XLV was slightly red this morning, nothing too much to stand out. And XLF was just taking over, right? And then later in the day, we had QQQ start pushing up as well, which brought our total index from negative to positive. So as long as you're seeing healthy rotation, guys, on the indexes, you can't really be worried about a flush intraday. It's very, very, very rare when you have a day on which there's no important news, like an interest rate decision, FOMC minutes, or some CPI, something big that we're looking out for, right? Very, very rarely will you see a healthy rotation day just turn into straight negative across the board on all sectors. So just keep that in mind. QQQ now, moving on the daily analysis, right? QQQ still riding this 12 EMA. As you can see, after the minutes, we kind of closed red, was giving people the impression that we were going to dump. We hit the 26 and moved right back up. Why? Because that day there was also healthy rotation, right? So tech took a breather. And now what does tech look like? When in doubt, move up. It was always a weekly bull flag. Even if you got nervous on this inverse doji candle here, right, which is pointing to the downside, you got to realize, guys, that our weekly high, our daily high or low is here, right? This, you could argue that this was the higher low, but the pattern wasn't complete yet. Anything above this level is a higher low, right? And when you carried it up a time frame, that's what we're looking at here, which kind of coincides in line with our 12 EMA area, right? On the weekly, it's even worse. We have even more space to pull back. It's this guy, right? To reverse the entire weekly uptrend. So as long as you know that you're in a weekly uptrend with tons of space, there's no real need to be nervous here, guys. Really no need to be nervous, especially if you're just holding a long-term portfolio. If you're trading, obviously, you want to come down to the daily 4 hour and 1 hour with me. But if you're just having a long portfolio, don't think I personally wouldn't think of selling anything. We still got so much space here, right? So weekly time frame, still beautiful. Currently still in a bull flag, right? Bull flag just means that we're not giving back a lot and we have a good potential for some follow through here. So as we continue to see healthy sector rotation, tech has been muted now for the past 2 weeks, right? We've been kind of trapped in this little range on the weekly bull flag. And the next, this is leading into tech earnings, right? So we really got to be careful with tech earnings here. But There's only two things that can happen. We're either going to confirm this weekly uptrend continuation with the help of earnings, or we're going to go down for further consolidation and get some more accumulation at the lower areas here and move up, right? There's really only two situations that can happen. But as of now, no concern on the NASDAQ. As long as bulls keep holding this 12 EMA, you know, still very, very, very bullish in from what I can see here. And, you know, this burden is on the bears to prove us something here, but they're not doing it. On to the Dow Jones. Dow Jones has been one of the strongest movers, guys, over the past 3 weeks since the resumption of since the banking crisis, right? Which was right around here, this big little dip here. So Dow Jones, all the boomer stocks, they've been steadily moving up. We've also had some of the technology stocks in the Dow Jones really moving higher here, guys. It was absolutely, you know, CRM was a stock, one of the main technology stocks in the Dow Jones that at one point was down 60%, right? 60% from the highs down to lows in December, right? So I was looking, as you can see, guys, like I was looking for it here in September. I had some more puts down here. I think I did get assigned back last fall. I got assigned CRM, but it was very, very easy. I think it was out of it in about 2 weeks because I'm always writing so low. And CRM at this point, right, is kind of lagging its respective index, right? So still, CRM still a good 36% off the highs, yet the Dow Jones, the index that it's in, right? You can compare it to QQQ because it's in there too. But as long as it's a member of the Dow Jones, right? When ETFs buy it, right? They have no choice but to pick up CRM as well. So the Dow Jones, if you guys see this pattern, right? It's kind of a longer head and shoulders, kind of in line with SPY. SPY is a bit dirtier. The NASDAQ just doesn't show the pattern at all. You'd probably have to go up to the 2-week pattern, and then it would give you a nice actual pattern like this. But the Dow Jones really proving it to us here. Still riding the 12 EMA on the weekly. Bulls are still riding it on the daily. No reason for concern. You know, there's the one stock that I'm looking for, right? Kind of a more boomer play is still Costco. Still trapped in this daily tightening range here, right? Very, very, very long-term range. Let's look at John Deere, Deere's DE. You know, John Deere also kind of stuck in the accumulation zone here. As you can see, guys, we haven't really moved around price here for now at this point, the last 2 years, right? We're trapped in a very, very wide accumulation zone. We're not really trending. You know, you see John Deere kind of does this sometimes for years before they just explode to the upside. I'm just naming, you know, relatively boomer stocks in the Dow Jones. Caterpillar still relatively near the highs. You know, McDonald's pushing through the highs, right? Coca-Cola extremely healthy. You know, Visa as well, pushing near the highs, extremely healthy. We're going to get them earnings on them. MasterCard as well. The one credit card company that's kind of lagging behind is slightly American Express, right? Slightly American Express, but we just ran through everything in the Dow Jones pretty much. And as you can see, guys, those companies are doing very, very well. They had their drop, you know, earlier, and they've recovered fairly well. At least they've recovered a lot quicker than a lot of the tech stocks out here. Moving on to the Russell. Now, moving on to the Russell. So, as you can see, guys, what I've been saying, IWM is the actual stock ticker for the Russell. So as you can see, guys, we've still been consolidating down the lows here. When it's an index and you want to write puts on this, because I traditionally don't buy shares. If I want to buy something, I will write puts on it every single time. Now, what we notice is the Russell is still towards the lower end of the range. However, when it's not a red day on the indexes, it's very hard to write puts for good premium. You have to be too close to price. But like, let's say on a day like last Wednesday, you could have written to the back at the lower end of this range here. But as soon as we get a green day, the premium in this range just absolutely evaporates. So I was looking at it today, but the premiums weren't juicy enough for me to be writing in this range down here. So I didn't touch it. However, the moral of the story is still healthy consolidation. Healthy consolidation, right? Now we're kind of trying to see if the bulls can confirm this daily uptrend continuation, break this high right here, and set a new higher high before continuing on to a more bullish pattern on the daily. Weekly still kind of trapped in a range here, right? So Russell, you know, small cap stocks. I'm going to be starting to look at the small cap stocks because out of anything, They have the most catching up to do. And should this market pivot bullish because we're at the peak end of the rate cycle, and because most of our large cap stocks, and even the mid cap stocks are starting to move up and starting to break their weekly and monthly downtrends, you would expect some continuation from the risk on sector. Especially you're seeing crypto do it as well, right? So IWM, the names in IWM are kind of lagging. They've kind of, this index was kind of lagging as a whole because financials are a big part of it. But you also, in this index, have a lot of small cap stocks that can get some very good attention. And then the next few days, I'm going to be looking for some plays that I'll be focusing the tail end of the videos. I'm going to be looking for, I'm going to have to do some analysis on my own, but we're going to be looking for some smaller plays that have just been beaten down and left down. Preferably plays that are actually still profitable, growth companies that are profitable with free cash flow in the bank, right? Not companies that are unfortunately hemorrhaging money. So we're going to be looking at some of those and for recovery. And yeah, IWM right now looking good. Bottom end of the range, guys, in my opinion, right? So I'm trying to buy this when it gets down here. I want to write puts. The longer it stays closer to here, if we push up like this, well, then my new bottom becomes here, and I'll start writing in the 173, 172 range. But as long as we don't confirm that daily uptrend, I still want the lower prices, right? So I kind of follow the market up, and then I write below the lows. Kind of as if you were trading them with shares or long call options. But yeah. Moving on to the VIX, guys. I want you guys to notice something on the VIX, right? So something on the VIX, we are now at, over 1 year lows, right? Very, very notable to me. When I see us get down into these ranges here, for me personally, that is when I start to get a bit more attracted to buying options as opposed to, well, I'll always sell options. I mean, that's how I make my weekly premium every year. That's how I make my salary every single week, right? I like realized gains and losses. But when the VIX starts getting this low and implied volatility gets low, you can start finding some very, very, very attractive opportunities on the long side of call options. So I'm also, in the next few weeks, going to be looking at some plays that have been kept down for some long call options. I've taken one so far, right? I've taken this one, as I was showing you guys. I had taken Johnson & Johnson at the lows, which was a very, very good trade. Closed it when it gapped up here. I was writing it up here. I was expecting it to top out at this range here, but it literally gapped up. As soon as I saw that, beggars can't be choosers, right? Like, green is green. When you see a large gap up like this, especially on a stock like Johnson & Johnson, took the profit on the call options, right? So that was just two of them. And the third one that I was bringing up last week was Estee Lauder. Estee Lauder loaded up a bit of call options down here. In the money, guys, in the money call options, right? I had shown you guys these plays whereby I was buying the 230s and writing the 270s to save a bit on the premium. So far, so good. Trade's been working out. Trade's moving in our direction. It was classic pattern, head and shoulders pattern, combined with the fact that the other stocks in the beauty sector were all labeled as outperform. We have our analyst targets as well as, before we get to the analyst targets, increasing margins, increasing revenue every single year. Analyst ratings expectations are in the 290s is the consensus, right? Which, funny enough, is right above the top end of our head and shoulders pattern here. So I was kind of eyeing this higher range of the pattern. So that's where I'll be looking to close out my call options personally. But we've been starting, guys. I haven't been doing long calls in over 1.5 years at this point. I think the last time I did them was like November of 21. All of 22 didn't do one single call option when the market was dropping just because there was too much uncertainty and the VIX was too high. The premiums were absolutely insane. So it was more shares and writing options. But now we're starting to get some juicy opportunities to buy call options again, which I love, guys. Integral part of my strategy. Now, moving on to some individual names. Don't want to keep this video too long. So individual names, let's go through the big tech names here. Apple, really nothing to see here, guys. Riding up the 12 EMA. I cannot find a buying opportunity for myself for Apple. At this point, I want Apple under 160, right? Because we're setting such a bullish weekly trend. I was kind of hoping that it got closer under the 160s, but it doesn't want to give it to me. It doesn't want to give it to me, but Apple, very, very bullish. Not really notable to, not really worth talking about because we're really just kind of bull flagging here at the higher end of the range. And until we see the bulls lose the daily uptrends of higher lows. Sorry guys, I'm tired today. Until we see the pattern losing the daily higher lows, there's really nothing notable. Bulls are in full control of every single time frame, guys, right? Full control. Microsoft should actually be pretty much the same, right? Bulls in control of the weekly, tons of space, right? Tons of space to set a higher low. Microsoft, I really want it in the, low 270 range. If I'm looking to write some options on it, hasn't really been giving it to me, guys. It's really just been bull flagging at the top end, riding the 12 EMA, riding the 12 EMA up, and really nothing notable here, guys. It's very tough for me to start a position up here because I like writing options so much. I like writing it on the dip, but we're just consolidating at the highs here, bull flagging at the highs. Bulls are still in full control. I mean, the bears are really going to have to prove something to me on these bigger names. The one that I do like, though, Google. I like Google down in this range here, right around the $100, 102s. Today we had a very decent drop. I was looking at the options, though, but you can really only get 0.5% for the 103s, which was kind of close. It is above our moving average. It's above the 200, above the 26. Wasn't juicy enough for me, guys. For the same amount of capital that I would have to outlay, there were some better plays, and we'll get into those a bit towards the end of the video in about a couple minutes here. Google, like this stock a lot, right? Bulls still in control, full control, guys. What can I say, right? So much space, right? And that's been the theme of a lot of the major tech stocks, right? The one that hasn't is Amazon, right? Amazon, sorry about all these lines, guys. I kind of do some technical analysis on the side. And so Amazon has been the one that's been trailing, right? The one that's been trailing behind all other big tech names is Amazon. Why? Like I was saying in another one of my videos, because they're actually at negative margins right now for the last year. It was very unfortunate, but they built a bunch of factories, right? Which kind of set them back a lot. They had a lot of capex last year, capital expenditures. Still a solid company, but guys, their retail business is kind of plateauing, right? So the growth in their retail business is not exponential anymore. We're plateauing. They're heavily relying on their AWS, their cloud services business, right? To kind of do most of the heavy lifting in terms of profit margins. Definitely not the same company it was, not the same opportunity it was in 2014, 2015. But in my opinion, I mean, it's still one of the largest components of the S&P 500. And we are still, this is some of the mean reversion opportunities that you may find. Still, QQQ is only down, 21% from all-time highs. Amazon is trailing 2x, more than 2x what the QQQ is, right? So decent little opportunity for some mean reversion up here. As you can see, guys, in the past 10 years, it hasn't really stayed below its 200-week moving average for that long. So now we're finally consolidating, closing above the 12 and 26-week moving average, which we haven't done since the market crashed, right? Haven't done it since the market crashed, where we really holding above. This was way too volatile to really get anything from it. But now we've been consolidating here at the while within the same, so I agree, it's a wide range, right? About a 15% range here. But now we're kind of consolidating, got some good accumulation down here. So if I was looking for a swing trade on Amazon, I'd probably target, right? I'd probably target this EMA here, the 200-week moving average. And, that may be only something that we're able to get with earnings. If they deliver very, very positive earnings, right, which is going to be next Thursday, then you could have a push higher here to the 120, right, the 120 area where the weekly moving average is. Short of that, I've been writing puts in this range right here under $100 because as we've been noticing, guys, this was kind of the banking thing, but they really like to keep it between 90 and $100. And in my opinion, that's pretty good value for Amazon, considering everything we've just been over. Now, Tesla. Tesla, my favorite stock for trading, at least. So, Tesla, once again, not much to see here, guys. Tightening up the range, pending earnings. Earnings on Wednesday. So we got to play on Tesla. And I'll take you guys through that after we go through this one and NVIDIA, right? So, as you can see, we have really not been able to get below 180 and close below 180 for a daily, right? We got close here, but 180 seems to be the area that the bulls really want to defend here, right? So the 175 to 180 range is something that the bulls really want to defend off this tightening range, right? So weekly, I mean, it's stuck in a tightening range, so you can't really determine too many patterns from here. But as long as we're staying relatively close to our moving averages, and the bulls seem to be bidding up every price on the dips, we're going to get some really good price action. And this is amazing when you're trying to write options, especially when you're trying to write puts, right? It's really good when it stays in a range. As I was saying, guys, for the past, at this point, it has to be, like 2-3 months, right? I've been writing puts, been having a lot of fun writing puts below 190, between the 190 and 170 range, depending on price action, depending on volatility and whatnot. But for the most part, ever since we've recovered this whole area here, right? Ever since we've put the weekly higher highs and the higher low pattern, it's been very, very easy to trade this stock, especially if you're writing options, because the premium is always relatively good. Even if you're writing almost 10% out the money, it's always really, really, really good premium. So that being said, that is it for Tesla. I'm going to talk more about Tesla in a couple minutes when I bring up the plays. NVIDIA, the one that everybody wants it to fall, but it can't. Why? Because our semiconductors, as an industry as a whole, is very, very solid. They have set good supports on the way up. Unlike NVIDIA, which kind of just rocketed up, right? Not really setting much weekly supports in the process here. You could argue, but definitely not as solid as this chart, right? Where we've consolidated, push higher, consolidated, potential push higher. So NVIDIA, very, very tough to short up here, guys. RSI remains overbought. But if you would have started shorting when the RSI when the RSI started getting overbought, look, you could have tried to short this whole time. It wouldn't have really given you anything, right? If anything, you probably would have been nervous the whole time. Even the dailies, right? Daily gets overbought, pulls back a little bit, pushes higher. Imagine if you tried shorting the daily overbought here, like right? So that's why they call it the relative strength index, because it's relative to what just happened, right? So be very, very careful with shorting stocks that are in an ETF that's in an overall uptrend on the weekly and the daily. I agree, NVIDIA is getting really, getting overextended here. But as long as the bulls remain in full control by not losing any daily uptrends and by not even getting close to the, look at how much space we have, guys. Right? Like, yeah, I understand you want to short down here, right? And make like $20 a share. Like, I understand. But it doesn't necessarily have to do that. It can go sideways up here. And this moving average will just start to curl up here like this, right? And it could stay weekly overbought. The monthly isn't overbought yet, right? Look at this candle close on the monthly. Be very, very, very cautious if you try to short things like this, guys. You know what I mean? I'm not saying that it's not possible to do, but, just be very, very cautious when you're opening positions like this to be short. So as of now, bulls are still in absolute full control. You have some, like I was saying in my previous videos, you have some intra-sector rotation. So they took the foot off the gas on NVIDIA, right? But as we can say, some names like ON Semiconductors have also been holding, right? We talked about this one the past few weeks. We've been writing some options on it. AMD as well. AMD has been relatively holding this channel as well. Actually, NVIDIA is one of the ones that seems to be holding up the best. You have Intel in there, which had a really, really good run. Intel is still holding the bull flag. Let's see, Micron. I really did not like Micron's earnings. I have no idea how they're up here. But Micron holding relatively well, right? So, you have a lot of names that are just holding these. TSM, as you guys can see, TSM, another one of my favorite positions to be writing on, below these levels here. So, that's it for the semiconductors. The semiconductors, right? The burden is on the bears. Bears have to prove us something if they want to reverse semiconductors as a whole, right? They're going to have to either fail this and reverse the trend. You have to either double top here and confirm a weekly downtrend. But as of now, it's technically still a weekly bull flag, right? It's technically still a weekly bull flag. Bull's still in full control of this 12 EMA. So just keep an eye out for that, guys. Semiconductors, still strong, still a lot of purchasing power in that type of industry leading in to a recession, and the profit margins on all these companies, guys, are very, very large. Some of the best profit margins in the industry, right? Well, not in the industry, but in the market as a whole. So they technically, high margin companies will outperform in the midst of a recession. So that's it pretty much for our market recap here. We went over a lot of different things, a lot of different names while doing the recap, right? Some boomer stocks, some tech stocks, and the indexes. So now, the plays. Tesla. Today, Tesla, when it dipped around the 183, 184 area, we were very lucky that it always does this. Stay all away from the page for too long and it just kind of evaporates, right? So I was able to pick up the 170s for about $1.72. $1.72 is what I picked them up for. And that was literally 1%, just over 1% for the week. The weekly expected move for Tesla, if you look at the 185 would have been better when it opened today, but even the 187.5s, right? So if you write the at the money puts, right? At the money puts and calls, as you can see, guys, let's just call it $7, right? Let's just call it $7. So if the stock maintains this price from here to Wednesday, let's just say that tomorrow doesn't happen and tomorrow's Wednesday, right? The expected move Wall Street is pricing in is $7, right? $7, which is about 5%, something like that, right? Expected move, if we were to Google it, Tesla expected move, I was looking at it early today, it's about 6.1%, I think, was the actual expected move on the stock. But this can usually give you a pretty good idea. If you look at the at-the-money strikes, this is how much premium Wall Street is saying, okay, right? It can either move up $7 or down $7, and that's your range from this current price. So that's how much Wall Street is kind of pricing in for that. So I was able to write the 170s, and like we were seeing, guys, where's the 170s on Tesla? The 170s is right around the range that I want to be looking for. It's the bottom end of this tightening range. It's right down here, right? So 170-ish, right? The bottom end of this range. I wouldn't mind picking up Tesla down there personally. That's why I'm writing it down there. If you think that that's too bullish, if you think that we could potentially fade down into this area, then as I was saying in my previous videos, you can, I look for between 0.5% to 1%. So as you can see, guys, now the 0.5% plays were at the 165s. This morning, they were down in the 162 area, right? So that would have even given you more of a margin of error for the week. These are weekly options. They expire on Friday, right? So I was personally looking for the 1% play, but a 0.5% play would have been around the 162s, which would be really good on the chart here, right? The 162s would put us down here, and it's getting real close to my personal fair value buy zone, right? After analyzing financials and growth rate and all that good stuff. I will eventually do some longer format fundamental analysis breakdowns, but for now, I think you guys prefer kind of the price action breakdowns, technical breakdowns, and showing you actual plays rather than just going through a bunch of, financials and whatnot that you can see on TradingView anyways. So that was it for Tesla. I did a couple contracts of these, so hopefully those play out well for the week. I think that even though they're, we have most of the information, right? The deliveries are in. The margins are obviously going to take a slight hit, but will it make the stock? Will there be some extra negative news upon earnings? Like, will they miss EPS? Will they miss revenue growth and stuff like that and expectations? And will guidance be terrible? I don't think so. Personally, right? I'm not under that impression. And from what most respected analysts have been saying, I also, they also don't expect something like a terrible miss on these earnings. So that's why I'm confident in this position right here. Now, second play I wanted to turn you guys on to, a new one that we haven't talked about yet. So this is what I'm talking about, right? Some of these smaller cap stocks, right? I mean, it's hardly small, but this is part of the, this would be in my category of the Russell 2000 stocks, right? Only at 8 billion market cap. So Bill.com is a company that specializes in business-to-business payments. Business-to-business payments, guys. So as you can see, they're growing revenue at a phenomenal rate. However, they're not profitable yet. But their growth is actually very, very, very good. Analyst consensus for the price of this stock, 1 year target's about 120 bucks. As you can see, guys, they IPO'd during COVID. Maybe you guys have heard about it. Maybe you guys haven't heard about it. This line, yellow line here, is just the lows that we actually had. So as you can see, we're almost back to IPO price. This used to trade at $340 at the peak of the bubble run, right? Peak of the COVID bubble run used to be trading for $340. Now, obviously, I'm not targeting back up there. However, we have some interesting things, right? So the price targets are bullish to the upside. The company is growing revenue at a rate of, I think it's still over 40%. And as we can see, guys, we have not had an accumulation zone like this since last May, right? This was, we're kind of grinding down the 12 EMA without ever really accumulating in a sideways range without making weekly lower lows, right? So now we're kind of doing it again, right? And if you look at the daily, what's happening on the daily, so we haven't had decent control of the 12 EMA. This is really tough to count. This is really, really tough to count. I like to see some accumulation down here, excuse me. I would kind of discount this whole area here. I would say the last time we actually had control off of good accumulation was back here in that May, June, July area of last year, 2022. It's starting to do it again. We're starting to accumulate and set some good patterns. I mean, you could kind of call this a very ugly head and shoulders pattern. I personally am a fan of writing options on this stock now at this point, down below in the $74 to $72 range. If you can get cheaper than that, that's perfect. But I personally think that the risk reward at this point is getting fairly juicy, guys. Weekly MACD is starting to cross to the upside. And I'm all about risk reward. Yes, the company is net money losing, and it is part of our small cap growth sectors. However, the risk to reward is pretty decent, and the premiums on this stock are also pretty good. So if you look down here, right, for this Friday, right? So if you're looking for a 0.5% play, right, that'll be about 35 cents. You could find these anywhere between the 72s and the 73s. This morning, right, we were closer to 0.8%. So I was fortunate enough this morning to catch Bill, right, on the opening candle, right? So this was the opening candle this morning. As you can see, it opened down to 75 bucks. So I was able to pick up the 72s for about 55 cents, right? So that's really, really, really good. They were obviously, this was obviously a good pickup. Now it's kind of run almost 3% into the close, right? But still some good premium left on these. Still in the ideal range that I'm looking for the stock, right? The 1% play is kind of greedy at this point, right? It's kind of close to our current price. Although the short-term trend, like we are short-term trending to the upside here, right? Short-term trending to the upside, but we're kind of getting getting a little bit close for the 1% play here, but there's still some good premium left on these contracts if you're looking for something a bit safer towards this range here. So that's it for Bill.com. The third play, I talked about it earlier, guys, Charles Schwab. Charles Schwab, I was lucky enough, once again, so you got to be here Monday morning, straight at the open, right? Charles Schwab, this has been on my list for a while here. As you can see, we're now profitable on our call options. They dipped down for earnings, right? So they dipped down after market open. They were trading about, $50, something like this. I didn't catch it right at the open. I was, busy writing the other positions, especially on Bill and whatnot. So I was able to catch it in the mid $50 range, about 50, 75, 50, 80, can't remember. But that provided us some really good premium on the 49s. So 49s is right below the bottom of earnings, right? The 49s, right below the candle, as you can see, right at the bottom end of our range here. Schwab was the play for the day today. As you can see, guys, at the current state right now, let me just refresh this page right here. So at the current stage, you probably can't pick up the 49s much for much. But if you wanted to get almost 0.5%, which is still fairly decent, it would be the 50s now. I do personally believe, and I'm looking forward to, upside further continuation in Schwab as it reverses this kind of longer term downside from the whole banking thing. I want it to come back and touch up our moving averages here for a little bit of mean reversion action. Oops, sorry about that. For some mean reversion action. So I wouldn't be opposed to writing a bit more aggressive. As a matter of fact, guys, I may even start rolling up and start trying to follow this up. I do have some calls on it. I do have some shares, but I may try because it's a safe play in my opinion. They pay a nice dividend. Their valuation is attractive. They have insane profit margins. I may not be opposed to triple dip and also trail my short puts up, because if I have to purchase more shares at these lower levels, I really don't mind. But for now, still some decent premium on these. The premium may dip off tomorrow because the earnings day is now through. But take a look up on these guys if you're interested in this stock. There is still some decent premium left on Charles Schwab. So that pretty much concludes our video of today. I'm sorry it's a bit longer than usual, but I figured I should kind of throw everything at you guys for today. What to expect for the week. Do a little bit of recap from last week because I wasn't here. And yeah, if you guys enjoyed, thank you very much for watching. Consider liking, consider subscribing, and I will see you guys tomorrow. I love you all. I hope your training has been doing awesome. All right, just absolutely awesome. I always wish the best for you guys, to be honest with you, for my friends who are also in the business, and for everyone that I don't know yet, who I haven't had the pleasure of meeting. I really want everybody to do well, and if I can help you out even a bit with it, I'm more than happy to, guys. So take care. Peace.